Welcome to International Securities Exchange's podcast series. Facilitated by renowned educators, ISE podcasts are intended to teach beginning as well as seasoned investors the ins and outs of trading. To find an updated list of podcasts, please visit www.ise.com/podcasts. Please be sure to listen to our important message following this episode regarding the risks of investing in exchange-traded options.
Now, this former high or low is just one type of support and resistance level. There's a couple that I'm going to go over. There's more than these. You get into things such as indicators, momentum oscillators, that type of thing. But we're just going to cover very basic price support and resistance levels. One thing that you're going to find is a little bit unique. I don't think it's unique in general, but unique in terms of what you see presented by a lot of people that are teaching about the market, is that I don't use a lot of indicators in my trading. So I don't use things such as the RSI or stochastics, Bollinger Bands, things like that. I rely almost entirely upon price action and to some extent volume action as well. Volume can be a lot more tricky to read when you're dealing with the FX pairs and trading in the Forex market. But if you're looking at things like futures and stocks, options, that type of thing, then you're going to come across it as being very helpful as another building block or another tool for judging where a price move is going to go. Now, when we're looking at the support and resistance levels, two of the main types of support and resistance that I use are going to be things like the previous zones of congestion as well as the prior highs and lows. Now, when I'm talking about a previous zone of congestion, basically what I'm looking at is some sort of trading range or basing type of action. Let me see if I can turn on a pointer here. Okay, that's a little fat, but I guess that'll work. But you can see here that at A, what we're dealing with is a congestion level. We have a downward move, upward move, back down, basically towards the, let's see, we're looking at 2004 here. So basically the entire year of 2004, we have this congestion that was forming in the GBP USD. Again, flip this pair around if you want to look at it for the Forex options. And even though there's smaller trending action back and forth, the larger pattern that we're seeing form here is this trading range, this consolidation, which tends to be a lot choppier. Usually if you're dealing with something that's going to show volume on it, you'll see a drop in volume throughout this congestion. And as we're looking at congestion levels as support or resistance zone, typically what I will do is I will kind of quarantine off the middle section of that congestion zone. And if I divide that almost exactly in half, that is often where the strongest support or resistance happens to be the next time it hits. So let's say a congestion zone breaks higher, for instance, like when A broke higher. It turned around, fell in about the middle of 2005 again, and notice that when it stalled for the first time in that congestion here, it stalled right in the middle of that trading range from A. Now in this case, the momentum, which is another building block that we'll look at here in a minute, was able to push it strong enough to the downside that it was able to break through that initial support level, come into another support level, which was the previous low zone, which you can see created another level of congestion over here at C. A better example of how this held and really played out well is if you take B and take that middle of that congestion over, and you can see at number 2 that it stalled again almost perfectly within the middle of that congestion zone. So a lot of times people do pay more attention to things like highs and lows, but if you're looking at congestion zones, the middle of those are often just as strong of support levels as a previous high or low zone. Now, over here we have a couple of other examples. In E, you can see that after that pulled back, that served as rather strong support on the way down, coming off of that low late last year, or coming off of that high late last year rather. It created another trading range at that zone, which is something that we've seen with a number of these. For instance, at D here, that was another congestion zone that was created as a result of the resistance from the congestion from B. Now, in number 4, we had another example that was similar to the breakdown out of B. We had this two-wave bounce within this congestion zone. So we've got that two-wave bounce off of the low marked 3, and then a breakdown, a very strong, rapid breakdown off of that high-level triangle. As it came into that first congestion zone, it only paused there, just like it did over here where it's marked number 1. Now, as the momentum continued to hold strongly, it was able to bust through that zone and is now coming into the congestion from C. So right now we are seeing another support level hit from this congestive type of action. Now, one of the things that you're going to notice, though, is that because the momentum here was so strong on the downside, a lot of times, let me see if I can get this to erase. Okay, there we go. A lot of times when you have a very sharp momentum move on the downside, the correction is not going to be a very rapid correction. Let's see if I can change this to a little bit smaller size, but it doesn't seem to want to do that. So let's see. Hold on just a second, guys. That might be too small, but hopefully it'll work. Anyways, so as we're coming into this support zone, a lot of times when you have a really rapid drop, like we had over here coming out of the low from the 1, as it comes into a support zone, it usually can take time for it to kind of turn over and allow the market to really correct off of that level. So that's what we saw back here at C, where even though it was a very sharp drop into the previous low, it was not able to immediately reverse or sustain a reversal off of that level. It fell into a longer congestion at that zone. And so I'm suspecting that what we're going to see in this particular Forex pair is that we are going to see a level of congestion take place here that could easily play out for another half a year to even a year at this general zone of support. Now keep in mind, as we're looking at this, this is a zone. It's not an exact price level. So even though in the past we've seen where it can hold the price exactly, just like it did on number 2, it doesn't necessarily hold the price exactly. And since the momentum was sharp into that level, a lot of times it's going to push through that level to some extent. So the lower end of this price support zone could very well be the lows from the beginning of 2006 and the end of 2005. And this is another type of support level. This is just a price support level from a previous high or previous low. Here's another example showing this type of support and resistance. This takes place on the EUR USD. Again, if you're looking at the options pair, just flip it around. Now on this, notice that I do have one particular level marked that is a congestion zone. So we have the middle of this trading range over here, which is shown in purple. And then as it comes into that support zone, you can see that it stalled and fell into a congestion level, again, right here just over the last month or so. Well, the last couple of months or so. Let's see here. Oh, I'm looking at a daily time frame. Okay, so this is just over the last month.
Thank you for listening to our podcast. To find more podcasts on options, stocks, alternative markets, and market data, please visit www.ise.com/podcasts.